In Asia have been open for a few hours, and the week kicks off with a slightly softer front month. Oil prices on Brent a little bit down on the early trade, now at 92.57, down about 1% in early trade, kicking off the week, which starts a few hours after the Chinese Communist Party Congress ended after 5 years, and all as expected, President Xi reconfirmed as president for another 5 years. Let's welcome Omar Ndegeya, a global head of derivatives at BB Energy. Omar, markets generally on the oil front at least seem relatively happy, sitting in the low 90s, not getting too excited by all the drama around us. The only factor remaining somewhat calm, oil price 92, 93, 92 again, 93 again. Your thoughts? You're on mute, sorry.
So sorry, I think we need to go higher on oil. So my bet is we get to, let's call it $100 on WTI. And then we see, maybe we come off then. But I think short-term higher. Equity markets look like they want to bounce a little bit more, but fundamentally, I think they're going to crap out. GBP parity easily, euro lower. So it's not looking good basically for Europe. I hope they're going to do like one of those. Do you remember that? Do they know it's Christmas time? Feed the world. They're going to do like warm up Europe, you know, warm Europe. Let them know it's Christmas time. But let's see what happens.
Send them a half a tree to burn, or an old couch, Let's go to Ali Al-Riyami, sitting in Oman, consultant and former director general of marketing, Ministry of Energy and Minerals in Oman. Ali, of course, China is Oman's biggest customer for its crude oil. Did you hear anything over the last few days out of China with the new renewal of the leadership to give you encouragement about your customers' future?
Well, actually, if you check the export numbers from Oman and where the oil or the Oman oil goes, then I think you would realize for the last few months and also the last year, the trend is the same. I mean, the Chinese, they buy almost like 85 to 90% of Omani crude. And this is continued during the crisis, continued during the pandemic. And I don't think that this trend will change in the very near future, regardless of what could happen in China. But the majority of the teapot refineries and also some other big refineries in China, their baseline is starting with the Omani crude. So there is no fear at the moment from our side, from Oman, that things may change in the future. So the main market for oil, for Omani oil, will always be Taiwan, China, and other Asian countries. So I don't think that there is any worries about that.
Let's go to London. Yasar Al-Maliki, Gulf analyst, Middle East Economic Survey, watches closely OPEC and particularly Iraq. Yasar, your thoughts on the China congressional story? Generally heard a fairly robust, muscular China talk quite a lot about battening down the hatches, so to speak, not a lot of encouraging economic growth outlook sort of narrative. Your thoughts from the demand outlook from China?
Well, I mean, thank you, Sean, and good morning to everyone. It's still unclear, what will happen in China. So, I mean, we have had the show, which we have been waiting for all of these months, which is the Chinese Communist Party Congress. Everything that we expected has happened. She has consolidated his consolidated his strong grip over the party and so on. But we have some fundamental issues here. I was just reading a Bloomberg, report on the GDP data, which just came out from China, and we have very mixed results. We have an increase in industrial production, it rose to 6.3%, but then unemployment at the same time rose to 5.5, sorry, percent. And at the same time, although GDP it grew, it was still, not as high as some have expected. I think one of the issues that we have is the fact that some of these decisions that the Chinese Communist Party has taken are quite steeped in politics, like the commitment to the zero COVID policy, which further intensifies the risks of an economic slowdown in China by the end of the year and on the next quarter. We need to look into Chinese LNG imports as well. This is a very important metric for, the European gas crisis. Moreover, perhaps even we need to look at the financial health of China itself. There might be a financial crisis brewing. Many people have been speaking about this when it comes to the real estate market fundamentals, a looming mortgages crisis and so on. But overall, China, in a way, the picture is very unclear right now. We have very mixed signals, but there are fears of a slowdown, and that is one of the main reasons why OPEC Plus took its decision, or at least say they took their decision based on, which is a global recession, and with China seeing its output declining.
Omar, we've had a fairly significant downward open in Hong Kong, with the Hang Seng Index dropping a substantial 6% in trade today. Your thoughts of where the correlation is these days between the equities markets and the energy oil markets? Are they still in one sentiment, or what is your sense about, you're talking, articulating there could be an upward momentum in oil price, but where is that correlated with the other financial markets, do you think?
But I mean, that's absolutely fascinating. So usually what happens is when equity markets start plummeting, oil follows, right? Because basically OPEC was always, let's say, I don't know what the word is, beholden, friendly, dependent on the US. So if equity markets, exactly. So basically the problem is that this time OPEC and OPEC Plus are doing their own thing. I mean, you've had some amazing statements from and actions from both Saudi Arabia, the UAE, leaving the Americans looking, let's say, perplexed, right? So they're threatening all kinds of stuff. They're threatening no OPEC. They're threatening to pull out troops. They're threatening, all this kind of stuff. So what's interesting is this time, I think, I mean, equity markets are stuffed. The Western, it goes all back to basically Europe. Europe was using leverage of 100 times the price of gas to make money. So they spent 20 billion on gas, Russian gas, and they turned that into $2 trillion of stuff to sell. That's finished, gone forever, and bye-bye. So equity markets, do what you want. The bottom line is going to be for Europe and the US, but the US later, one step removed, is cry about it. Do
you think in that respect sorry, go ahead, yeah.
The oil markets are going to be very interesting because usually once you get that fear and panic, then basically it permeates all markets. But what happens when OPEC basically cuts decisively oil supply, right? That could make a market where oil prices don't really move that much lower and could actually move higher. Why? Because of the possibility of cuts. And never forget, because of all the stuff that the EU and the US want to do in terms of sanctions, the oil price cap, the gas price cap, all this kind of stuff. So I'm in two minds about, I am absolutely certain, as certain can be, that equity markets are not just going to go down, but are going to absolutely plummet. And people just haven't started to panic yet, but they will. The question,
well, it looks like there's a bit of panic in China and Hong Kong this morning. The Chinese market down 10%, and are down on some of the bigger stocks that international investors are interested in, like Alibaba. But sorry, you were just going to say on oil?
On oil, I think basically the jury's still out. Either once we get, so in my mind, we're going to get to, let's call it $100 WTI, maybe even a little bit higher. Once we get there, then it either corrects a little bit, goes from like 100 to 80, and then up it goes, or it goes from 100 to 60, and then up it goes. So the only question is how big the coming correction is going to be. So I don't see the kind of collapse in oil prices that I see in terms of equity prices, which again is telling me that something, fundamentally different, something that we haven't seen in historical terms, because it's always been, OPEC towing the line and, helping, whatever you want to call it. But I think this time is different because the West has said that, we have no use for oil past whatever it is, 2030, whatever it is, and there's surplus to requirements. So I think you're going to see the two diverge.
Well, we certainly have a very big surge in VLCC day rates passing $100,000, something of a multiple of 4 times your average VLCC day rate, as Chinese refiners seem to be boosting crude buying again. Ali, I didn't have yet your insights on the decision by OPEC Plus to increase quota, or to cut quotas, not increase, perhaps some will increase, but to cut quotas by 2 million barrels a day. Your thoughts on that decision, and do you think it gives the Brent market a firm floor at $90?
Well, actually, I think if you ask me, then my opinion is that the decision to cut 2 million was the right decision. I think it was late. The decision was supposed to happen long before now. I think OPEC, they were in a rush to bring back the 10 million barrels that they have cut 2 years ago, and they are gradually were starting to bring the barrels back to the market, but without having enough justifications. Actually, this is my opinion. Without having enough justifications on the market fundamentals, and the pandemic was still there. The worried about recession is still there. The growth in China is not there. The elections in China was one of the issues. So all of this, there were a lot of red lights on the way that when the OPEC decided to bring back this 10 million. So I wish.
But just on that point, Ali, I mean, the reality is they didn't bring back the 10. 3 million was a fictional quota that they're not producing and haven't been producing. So there's many of those producers, after they cut the supply, were unable to bring it back.
Sure. I mean, of course, they didn't really manage to bring back the whole 10 million. There are some few countries, and they're still struggling to bring back the other, to produce to their quotas. But nevertheless, I think the market we were not ready to accept any extra volumes in the previous months. And the decision, I think it was a good decision to at least to reflect the reality of the market, and also to reduce the overhang. Although that a lot of consultants and also a lot of analysis, they say that there is no more overhang. The market is the demand is there, and we need more oil. But I don't see that it is a real effect. And if you see the world economy, it's not growing, Sean. I mean, there is no fundamentals supporting any increase on crude oil, either in Asia or also elsewhere in the world.
Yassar, your views on that question? I mean, ultimately, as Ali says, the OPEC Plus decision has reduced that sort of fictional extra production of that 3 million capacity that wasn't being produced down to, it will do it from November 1st, if indeed it all happens. I'm wondering your thoughts on the tangible outlook for this quota cut, how much of it will be real, and what does it do for oil prices through the rest of the year?
Well, they have all, if you ask me, Sean, then I think they have already sent, the request to the countries, and also it was published, the quotas that each country that they have to cut. But in reality, of course, nobody not everybody will be able to fulfill the requirement. There are still so many OPEC countries or OPEC plus countries that they will not be in a position to get. There are only 7 or 6 countries that they will really cut: Saudi Arabia, Kuwait, and UAE, Oman, including, and these are Iraq maybe. So these are the countries that depends on to really cut the volumes. But again,
let's see
we
what
are talking.
you saw.
We're talking about 500,000 barrels, Sean, out of this 2 million. Yeah.
500. Yusar.
Yeah, I mean, I do agree with the Ustad Ali there on a few of the points, and especially on Iraq. I come from Iraq, and we know very well, sometimes data can be manipulated. That said, we could look, Sean, we could look into your.
Well, Ali has said they're only 500. That's sort of much on the lower end of the range that I've heard in terms of actual.
Which is 800 to 1 million, depending on who you ask. But, we have to look at this from 2 perspectives. I mean, we could easily look into what the IEA and OPEC think what the call on OPEC is going to be. So, I mean, just bear in mind that from starting November, OPEC is going to produce around, and we're just talking OPEC here, like 29 million barrels per day. But, the IEA and OPEC, they expect 29.77 million barrels per day and 29.45 for 2023. So we're just talking 2023 here. In September, Mies did some calculations, and we expected that production was around 29.91 million barrels per day. So if in November that falls to 29, you still have 0.77 and 0.445. That's not much, but that is exactly what it is. The difference. And what this basically entails is that the market is going to be in deficit. So this is one way to look at it. The other way to look at it is, I just want to discuss the emphasis on investment. So we had Minister Mazrou'i of the UAE coming out, speaking about the lack of investment, and you have also now, even the Americans, even the Biden administration saying, we need you to invest more in the upstream in the US, and this whole restocking the SPR, creating a floor price of 70 to encourage investment and so on. The major issue that we have, we need the price stability, we need price guidance, we need to know that there is a certain flow to the price so that oil companies could invest. Oil companies are still reluctant. But the main idea here that we need to have in mind, the IEA put out the 2022 investment report, and in it they said, because commodities have been going higher, some 25% inflation in cost of input materials, and this is one of the biggest issues that oil investors are having, or oil companies. Are we going to build expensively today, and in the future we do not know if oil prices are going to stay higher, or do we bang every buck out of the existing facilities that we have? So this is the issue here. OPEC has been saying we have done.
Can they get to that? I mean, ultimately Ali just said the global economy isn't growing, and typically the outlook from all of the analysis from the World Bank and others is moving towards recession. Can OPEC Plus, in that context, with that backdrop, choreograph or cut to keep oil prices above $90 a barrel while the world economy is going into recession? Can those two things coexist?
It's hard. I think it's hard. I mean, Ustad Ali, if you just allow me one thing to say here, it will be hard to sell that idea, to the world, because the problem is we have a inflationary environment, and by cutting down supply, you are kind of exacerbating that, and adding more price pressure. But, I'll give it to Ustad Ali. Maybe he could add something on that.
No, I just wanted to emphasize about Sean's question. I think those two things don't go together. I mean, you as OPEC, you ask, or you want, or you wish that the price to stay at 90. Same time, you are worried about the recession, and this was a statement from OPEC themselves that they were trying to be proactive and to reduce the production, because they see that the world is going to a recession. And then at the same time that you want the prices to be above 85 and 90. I mean, these two things doesn't go together, and you have to compromise.
Let's get the survey question in on the outcome from the China oil markets. Now have a firm $90 floor through Q4, with OPEC plus cut taking effect on November 1st, which is going to see a certain amount of real barrels taken off the market. Maybe nothing significant, 500, 700, 800, but nonetheless, markets are going to get tighter. And we have, Omar, the outlook for the European sanctions. Perhaps Russian oil might drop away as well. Looking at the beginning of the week here, Monday morning, Omar, is there anything, do you think, that gives this market direction? You are still calling for that upper. I mean, for WTI to get above 100, that's, at least in this current moment, looks like a very big move. Do you have a sense of time frame and what might be the engine for that?
Yeah, I mean, I'll tell you what the engine, what the big engine that's lurking under the cover. You have inflation. Consumer price inflation, not into factories. Consumer price at 10%. Yeah? You've got interest rates at 3%, right? Okay, so basically
and
you
going
can borrow
higher.
Yeah, you can borrow at 3%, and you've got inflation at 10%. So basically, what does that do? That allows people to borrow at 3, wait for prices to rise 10, and make money. What does that create? More inflation, right? So the central banks, they're not going to increase interest rates to 10% because they'll all go to zero. So you have inflation. When you have inflation, commodity prices are going to go up. What's going to happen to equity markets? They're going to go down. So that's my kind of overbearing thing. Not so much OPEC are going to do this and 3.2 minus 1.5 and all this kind of stuff. Inflation is structurally in this market, and you're not fighting it. You're pretending. You're basically blowing smoke and saying, I'm serious about inflation. I really am serious about inflation. If it's 10%, right? So back in, I don't know when, 1970s or whatever, when inflation was at 20%, they increased US interest rates to 20%, stopped inflation. They can't do it now. Why? Because their debt is massive. They'd be paying every single bit of money that they have, their entire GDP, all of it, to finance their debt. So what's going to happen? Everything is going to keep inflating away. Everything. Prices are going to go up. They're not going to come down. Now, if you own Apple, you might own it at whatever, I don't know, $1,000, right? And at the end of the year, it might be 1,001 or 1,005. But your iPhone is not going to cost you 1,000. It's going to cost you $5. Your Big Mac's going to be $100. What are people going to do? Nobody knows, right? Where are you going to put your money? Where are you going to put your money? If you put it in equities, you're stuffed. If you put it in the bank, it disappears in 3, 4, 5 years. What are you going to do?
In a Palm Island mansion, now worth $100 million, apparently. Who would have thought that 20 years ago? Ali, your thoughts on the outlook for clearly the Gulf states are enjoying a moment in which there is fiscal health after a period of difficulty in recent years. We have Sarah Akbar, who you know, on earlier in the week or last week, articulating how important this price cycle is to the region as perhaps the last price cycle in which these big oil revenues may be available if indeed the great energy transition happens. How do you see that in that sort of historical context of what is currently in play, and how important then it is to try and defend the current situation?
Well, actually, always oil revenue and gas revenue in this region is very important. And I think we've seen this, waves of going up and down. And we always say that I hope this time that the governments will learn how to plan, physical, financial issues and to plan to better next time we have a same wave and so on. And we've been seeing this for the last decades. But I think I can tell you now that most of the GCC countries, they have already realized that maybe this will be the last, chance for them to capture the revenues, the oil and gas revenues, and to start, justify, the economy, and to start thinking about, adding more industries in the region, and also to the economy, to the GCC economy, especially in Oman. Just yesterday, we had a very huge, conference about the hydrogen energy. So we are now slowly, but surely, we are moving towards a better kind of plannings, a better projects, adding value projects in the sector in Oman. Moving away from normal kind of revenues from oil and gas. Agriculture is one of the sector that where it is very important. Tourism is growing in Oman. So there are some momentums, in different ways. And if you visit Oman during summer, Salalah is booming. So there are some few other sectors, industry, hydrogen, you name it, and they are all tourism, and not only in Oman. Saudi Arabia is doing the same.
When you look at what Saudi Arabia is doing, it sort of it does strike me that it's not a surprise that they're very muscularly defending a higher oil price. Yasar, you get the last word this morning. Let's get the vote of the survey result in. I agree. I mean, this room at least seems to overwhelmingly think that $90 oil can coexist with the global recession conditions. Yasar, the other thing we had in the last sort of days was kind of like at least a public acknowledgement of some description that the JCPOA deal is dead, more or less, and at least it's generally consensus now. Nobody's trying to, but interestingly, at the same token, we had the first headline that I've noticed in a while of the Houthis flying rockets in Yemen. Those two things coming together, maybe a coincidence, maybe not. But your thoughts on this move now into next week with the cut coming from OPEC and Iran not coming back to the market. We could get into a pretty tight supply-demand situation.
I mean, it really depends on how you say it. By the end of the day, Yemeni exports, they come majorly from two ports, Bir Ali or Durham, which was attacked, and the other one is Sheher, and they both, on a good month are around 40,000 barrels a day. So no, I wouldn't really call them as significant. The main threat here is that Houthis are flying drones, attacking the UAE or attacking Saudi Arabia or other infrastructure in the region, or maybe trying to attack tankers on Bab el-Mandeb.
Well, we're getting a front row seat of these infamous Iranian drones now in Kiev.
Exactly.
Getting a sense of like, oh my goodness, these are serious weapons.
I mean, here is the thing, and I was thinking about this, because I thought you might ask me about the US and Saudi Arabia and so on, but I think it is very clear that the Saudis have been vindicated, with all of these Iranian drones flying in Europe, now in the backyard of the US itself and NATO. So if you are asking me, and you are saying, an expanded Russian-Iranian cooperation, not just, military is one, economics and perhaps energy in the future, although that is a bit, overinflated by both countries, but that is a problem, that is a challenge now for Europe as well. So the Saudis have
surely it must be a challenge also for the Russian-Saudi relationship. It does seem, on the scheme of things, that sort of always still confuses me, the closeness that the Saudis have with the Russians, why the Iranians and the Russians are also so intimately connected on these issues. We're not going to answer them now after a half hour is up, but nonetheless, it does seem like a square that can't be circled, or a circle that can't be squared. Listen, as always, it's great to have you guys on this Monday morning. Omar Najia, Monday morning quarterback, nails it every time. Thank you, Omar. Yasar, thank you for getting up so early in London. We do appreciate it. And we'll even appreciate it even more after next week when it's 6:30 in the morning and not 7:30 in London.
Oh, God. Okay.
Ali, as always, thank you very, very much. Really appreciate your insights today. Oil prices, as we said at the top, trading a little bit lower. But equity markets, interestingly, Hong Kong in particular, taking a big dive on the first trading day after the reappointment of President Xi. All the best. Have a good day.
Thank you, Sean.
Thank you very much.
Thank you.